This is the show the Real Vision community has been asking for. 3 ideas. And exactly like the title suggests, an expert comes in and gives you 3 ideas about where you can put your money right now. It's not trading advice, but it is a starting point for you to do your own research. We're showing you a sneak peek, but click here to subscribe and get the rest.
The US dollar usually peaks around the first rate hike. And the US dollar starts to fall after the second probably rate hike. But this time it's proven to be different because there is this additional variable called inflation. What is the global macro backdrop? It is something so unusual. And, basically, if you start from the US, back in 2019, when the Fed was cutting interest rates, we thought it was unusual. And it was really unusual for the Fed to be cutting interest rates while the stock market was pushing to new highs. The Fed cutting rates while the market is ripping through a bull market. It is unusual, but there was a lot of deficiencies inside in terms of the liquidity, in terms of the slowdown, and indices were having a life of its own. And the reason that I'm mentioning that is because right now it is the opposite. So as abnormal as that was in 2019, it is equally abnormal where the Fed is raising rates in the middle of a bear market. The market is down, more than 20%. The S&P is down 25%. So the stock market is falling. Unemployment has been also falling, except of the last few months where we've seen some sort of stabilization. And basically, and the market is falling and interest rates are pushing up. Why? Because the Fed is moving towards another objective. And as we all know, the Fed told us that it is ready and willing to sacrifice a little bit of growth and more upticks in unemployment to fight this thing called inflation. And as simplistic as this statement is, and as we've heard it all before, it is such a stark reminder for anyone who thinks that whenever there is weak data, they have to get in on this party, on this complacency of, the pivot is coming, weak data is good for the market, and we're going to buy S&Ps, we're going to buy NASDAQ, we're going to buy gold. And yesterday, late Thursday, it was another onslaught of reminders by the Fed telling us we're still going to have to raise rates as long as the economy can handle it. And yes, ISM manufacturing fell below 50 and so on and so forth, but that's not enough. And this must be a very important reminder for why we should very well see further declines in indices. And just one thing, because I'll give you a chance, Samuel, to place a question, is that for a lot of guys who are enamored with the seasonals, basically September has been very bad for the S&P, right? We know that. And last month it was down 9%. So you go on Twitter and you see these people who are showing you that in most of the times when we had almost a double digit or a really bad September, you had a rising October. When September went down 7%, 8%, 6%, October went up, 8, 9, 10%. And I'm sure a lot of people are asking me, are hearing me speak about indices, and I have not said a single word about FX while I'm supposed to be speaking about FX. And I'm going to get to that very point in a bit. So what's different? Why is this October could very well be actually not up, but it's going to drop? And why we're taking these trades that we're taking?
Well, I mean, before we get into the currency trades, I do want to just drill down on that a little more, because I mean, much of what you said here, we're aware of. So I guess I really want to. It's almost as if I want you to repeat that, but in your context. I mean, we know what the Fed is doing. We know that this is we know that this is a very unusual situation. I think that's the most important point I'm taking away here, is that we've got the Fed in the U.S., raising rates when there's an impending recession. So how does that work within your framework
Right.
before we get to these trades?
So one last thing before about indices before I start with the first trade is that in each of the other times when October went up, it's because whether it was in the 70s or it was in the 60s or it was because the Fed was easing. It was easing, or it was towards the end of or at the beginning of an easing. And right now, the Fed told us that it's still very much in the middle of a tightening, which is, and they have to see the white in the eyes of inflation. And I'm afraid that one day we're going to hear somebody writing a book about how the bond market crashed in 2023, and people will say, while we were looking for the eyes for the white in the eyes of inflation, the whites in the eyes of recession stared back at us, or something like that.
But I'm curious. I mean, you're pinpointing something, but given that the Fed is raising interest rates when we're in a situation where a lot of people think that we're looking across the precipice, what does that say to you, Ashraf, given the fundamentals, the experience that you have as an FX and commodities trader for all these years?
Right. A lot of rules have been broken. So the typical, and here's what I'm trying to say. Any guy, any person, any guy or girl with at least 5-6 years in experience in FX is going to tell you something. And it's going to tell you the US dollar usually peaks around the first rate hike. And the US dollar starts to fall after the second probably rate hike. But this time, it's proven to be different because there is this additional variable called inflation. The head of the Federal Reserve has been appointed, and his term is, he's got another 5 years ahead or 4 years ahead. He doesn't have to worry about that. Midterm elections is an issue, but it's not. And they've got this big enemy called inflation. And this is what did not exist in any of the statistics that told you what happened in the rate hikes of 2015 or 16 or you'll have to probably go back towards 1994 when they crashed the bond market. That is why what is this telling us is that if you want to play in FX, for instance, you have to be careful. Do you need to be ahead and be contrarian and say, I'm going to sell the dollar because we're near the end? Oh, I'm going to still go along the dollar.
I hear you loud and clearly. What you're saying is the Fed is in an unprecedented position, raising rates while we're looking over the precipice of a potential recession. So that's a perfect way to get into your first idea. That's going long the euro against the pound. Now, on one level, a lot of people are saying, well, that sounds easy. The pound has been historically weak, although it's recovered from that historic weakness now. But you're really looking at it through a different perspective. And so let's get into this, because a lot of people here in the UK are trying to make themselves feel better because they say, well, the pound isn't down so much against the euro as opposed to the dollar. But tell us how you're looking at this and what are key factors and why now? Because if you would have done this trade, just about 10 days ago, and then the upside that we had with the pound was incredible.
Great. Yeah. So look, when you want to get into a trade or an idea, at least what we do here, we would like to see the fundamentals fitting the technicals, and the technicals, whether you're using a classical technical analysis or you're using pattern recognition fractals, or you're using yield spreads, a little bit of the fundamentals. We need to see as much as of that, as much as of those different factors across the spectrum of analysis gel together. Now, before I say this, we have to be very careful, because this was one of our best trade so far in 2022. And you always need to be careful on going, publicly and issuing a trade on something that has already worked over the last 5-6 months. Are you at the end of the train? Are you at the end of the road? And I was having second thoughts when Real Vision called me and they said, what are your best 3 trades? And I said, should I include this? Should I include this? And the more I see about the equity indices backdrop, and the more we learn about the desperate measures by the UK government, the more I think that there is more grounds in this trade.
Hey there, revolutionaries. To join a community sharing insights like you just watched, head over to realvision.com. There you will get unbiased insights and exclusive access to the very best, brightest, and biggest names in finance. Be a part of our community of lifelong learners. See you there.